Okay, hi guys. Zaheer Anwari here on behalf of the Dynamic Trader. Can I get a quick hello in the chat box that you can hear me, that you can see my screen as well, administrator, if you don't mind. Just give me the thumbs up. Hello. Okay, fantastic. So sound is okay. Yep, screen is good as well. So can you see my charts if I switch to that window? Yeah, okay, fantastic. And anyone else that's in the room, if you don't mind giving me a hello. So I know there's other people in the room as well, and I'm aware that there's people on YouTube that I cannot interact with at the moment. So um, I hope you're well. I hope you've had a good week so far. It's been an interesting week, and there are some moves happening. Foreign exchange it's still very uninteresting. I know most people in this room will probably be trading foreign exchange and will probably be a little bit surprised to hear what I have to say. But I'm a long-term trend trader. I look for big moves in the market, and so I focus on the monthly, the weekly, and the daily time frame. As private traders, these are the time frames that you want to be focusing on. You don't want to be focusing on the lower time frames. The lower down you go, the more candles, the more noise you have to deal with. Excuse me. Most of you guys are probably working some kind of, maybe you're in a job, or you're a business owner. Maybe you have family, you're married, you've got kids, you've got a lifestyle, and then trying to day trade alongside that, it's just very difficult. Even if you don't have that, even if you're free to live the life that you want, you still really don't want to be day trading, because you're compromising time for money. You want to be looking at big moves where you do less but make more. That's ultimately what trading's about. It's about doing as little as possible to make as much money as possible. And it's a difficult concept for a lot of people to understand, and that's because if you go on the internet, a lot of information about short-term trading and day trading and quick riches and scalping and all of these terms, but the reality is that very few private traders actually become successful at trading, and that's because most of them are trading on lower time frames. The people that sell these courses will make you believe that you're the problem, it's your psychology, you haven't got the right mindset. It's absolute nonsense. Anyone can achieve trading in success in trading, but you've got to have a particular approach. um, if a car is broken down because the clutch has gone, uh, there's a problem with the car. The actual mechanics of the car, the clutch has gone. You can't change your mindset and your psychology to start making your car work. Your clutch has gone. You have to take the car to the mechanic to fix your clutch. Doesn't matter whether you're male or female, how old you are, your age, how rich you are. Your car has gone because of the clutch, not your psychology. It's the same thing with trading. If your system is not working, it's not because of you, it's because of your system. You have to go back and look at what is it that is causing you to have inconsistency. Is it the time frames that you're looking at? Is it the risk management that you're using? Is it the way you're placing your stop losses? Is it because you're taking profit too quickly? Is it because you're letting your winning positions run? Is it because you're adding to losing positions? Is it because you're not adding to winning positions? Is it because you're not using trailing stop losses instead of take profit levels? There's all of these questions that need to be answered before you go down the route of thinking, well, maybe it's my mindset and my psychology. Yes, that is a trait of a good trader. It's important to have the mindset of a trader, but that comes with time and experience. That comes with having a good system. That comes with understanding price action. And it then comes with time as you put your strategies into play. And these strategies should be proven strategies, not strategies that you've made up based on what you feel is a good strategy. These should be proven strategies that have roots from before the internet, techniques that old school traders used to use. This is what makes a good strategy, but of course adapted to the modern market environment, because market conditions have changed slightly. Okay, so that's where I come from, guys. I'm a long-term trader. I'm looking for big moves in the market. If you have any questions, please put them in the chat box. Before we get into the charts, a lot of people often ask me, How do I get into trend trading? I want to get away from day trading. It's just not working. I'm compromising a lot of time with my family for time in front of the charts. I'm day trading the Asian session. The Asian session is the least liquid session out of all the sessions. You've got the UK, which is the most liquid. You've got the US, which comes in next, and then you've got the Asian session. The Asian session is the least liquid. If you're day trading the Asian session and you're wondering why you're not getting anywhere, it's because it's the Asian session. So what that means is you have to, if you are looking to day trade, you should be day trading the UK session. That's the most liquid. However, most people are working, so they cannot day trade the UK session. So they then try and day trade whatever they can do. What you want is a system that is not limited to sessions. You're only looking at end of day prices. So whether it's a UK session, US or Asian, your trade is just held all the way through for weeks and months at a time. Sessions don't become important. What becomes important is good preparation, waiting for prices to close at the end of the day, then going to your trading plan and using the right strategy for the right market conditions. That's a little bit further down the line. What you guys first need to understand is what kind of market conditions you're in. Most private traders have very little idea of what market conditions they're in. Again, because they're looking down at lower timeframes, and because they're looking down at lower timeframes, they're getting caught up in what they consider trends on lower timeframes. If we look at the definition of a trend in its true sense, anything that is a trend is long term. If you think of fashion, trends last in play for a long period of time. If you look at beards now, beards have been very fashionable for quite a long time now, and probably going forward they'll be fashionable for a very, very long period of time. We often talk about fashion as a period: 60s fashion, 70s fashion. That's a decade. If you look at how fashion is dictated year in, year out, it's seasonal, which is a minimum of 3 months. A fashion trend doesn't last a few minutes or a few hours. You're looking at weeks and months and years. That's how you should be looking to define trends in the market. If you're looking at trends on lower time frames, you're just fooling yourself. And the only people that really profit from these are brokers, because the more you trade, the more money the brokers make off you. So they will encourage you to trade on lower time frames. Want to get away from that. Typically in a year, and this is across all markets, I can take anywhere from 50 to 100 trades in a single year. That's in foreign exchange, UK stocks and US stocks. 3 markets, 50 to 100 trades. Most traders do that in a week. Some do it in a day. They're scalping. Okay, so people often ask, how can I get involved in day trading? Where is a good place to start? If you check out these websites, zaheer.live/seminar, I have a day of live training on March the 23rd. It's a whole day, but it comes with a whole load of goodies, a month of support, weekly webinars, watch lists, training in stocks, commodities, currencies, just a really in-depth introduction into trading. And most private traders do need to take a step back and do need to look at going back to basics, because even certain elements like candlesticks, people really don't understand how to use them properly. So we'll be covering everything in here. If you're abroad, then you can look at the online version, which is zaheer.live/apprentice. Here in the UK, it's zaheer.live/seminar. If you're abroad, zaheer.live/apprentice. And that's £99. Whether you're here in the UK or abroad, it's £99 for a month. It's cheap, guys. If you can't start investing into your trading, you're going to struggle. If you're using free software like MetaTrader, you're going to struggle. If you haven't had any proper education, you're going to struggle. Coming to free webinars and seminars day in, day out, it's not how you're going to achieve the consistency that you want. You've got to start looking at this as an investment and invest into it. It's just like any other career choice or business that you guys have been involved in. If you look at whether you've been to university, you've paid for it. No doubt you've got some kind of qualification, you've paid for it. Trading is no different. The only difference is this, guys. Trading is not expensive to learn, so you don't need to pay £20,000 for a course, which a lot of people out there charge. And secondly, you can start making money in your first year. If you look at career choices, if you go to university, it takes 4 or 5 years to get a degree. You're not making any money in that 4 or 5 years. In fact, you're just paying out. Whereas with trading, you can make money in the first year. But of course, that is dependent on market conditions. It's a very, very different approach. I saw this quote the other day about how trading is like getting a university education. That's absolute nonsense. Trading is nothing like getting a university education. The difference is this: university will take you into the system. The university will make you work so that you get involved in the 9 to 5 and that you grind out a career for the next 50, 60, 70 years of your life. That's what a university career does. In addition to that, university, by the time you graduate, you come out with 30, 40, 50,000 pounds worth of debt. That is what a university career does. What trading does is leverages a salary so that you can clear off all your debts and that you can bring forward the retirement phase. We no longer have to limit ourselves to retiring at 50, 60, 70, 80, whatever it may be. If you do this correctly, you can be an informed choice in an informed place to retire in your 30s, in your 40s, because you're, instead of taking money and putting it in a bank or taking your salary and simply putting it into a house, what you're learning to do through trading is leverage it and see far bigger returns. But you've got to have a game plan. Year in, year out, you've got to have a 5-year game plan, just like anything else. Within 2 to 5 years, you should be able to start generating good sums of money. But remember, every month you've got to be adding to your account. You got a salary coming through, you add it to your account. You got a salary coming through, you add it to your account. Even if it's just £200 or £300, if you do that consistently, month in, month out, and you're trading it, that's how you'll grow an account. Get away from thinking quick riches are made on lower time frames. It's exactly how people are going to fail. Be smarter than that. Be smarter with your time. Be smarter with your goals, your dreams. Don't let people take this away from you, and they will. There's people out there selling you what you want to hear, and you're achieving very, very little. Okay, so this is a starting point, guys. And we have a lot of people in our community now already. Many of them come from day trading backgrounds. Many have come from paying out for very, very expensive courses and then learned close to nothing. Come in here, within a month, everything changes. And I'm going to show you some of the trades that our community members are actually taking advantage of. Before I get into that, let's understand the chart in front of you. Let's understand what it is that makes up my chart. In trading, you must have an edge. Regular visitors to my webinar will know you must have an edge. If you don't have an edge, if you cannot define your edge, you do not have one. And if you do not have an edge, you'll get eaten by someone who does. This is what trading is about. It's a win-lose game. So it's a zero-sum game. Of course, you've got the middleman, which is the broker. He always profits. He or she will always profit. But in terms of traders, there's a winner and a loser. Okay, so the winners are the ones that consistently play out over an edge. Now, that doesn't mean that you don't have losses. Losses are part and parcel of trading, because trading is all about probabilities. But losses should always be capped. They should be small and capped. Your winners should be large and uncapped. Remove your take profit level, guys. Remove that 1-to-1 ratio, that 1-to-2 ratio. You will never grow in an account with take profit levels. What you want is to allow your winning position to run. You've heard the expression, the trend is your friend until the bend at the end. Everyone understands it, but it's so badly practiced. The problem with trading is that everyone is well informed, but very few people are knowledgeable. Everyone seems to understand the terms, but no one knows how to execute it. Yeah, I put up posts on LinkedIn. I put up a lot of tips on LinkedIn, and every time I put a tip, that I have all of these guys saying, yes, totally agree with you. This is how we should do it. Everyone has an opinion, but I can pretty much guarantee that if I sat down and had a conversation with a lot of these guys, there'd be massive holes in the way they actually execute what they think they understand. So let's start bringing clarity to your trading. Let's start really understanding how to develop an edge, and that starts by looking at the monthly time frame at the top. Then we have the weekly and the daily, bottom left, bottom right, and I have my watch list. Now notice how I have a big watch list. Inside that watch list, I also have indices, I have stocks. I don't have it listed here, but I also have commodities as well. And when it comes to stocks, I look at UK stocks and US stocks. So how do I start looking for high probability environments? How do I start looking for long-term opportunities in the market? The first tool that I look for, if we look at the monthly time frames, and I'm just using the Aussie dollar here as an example, are these pink lines. Now, the pink lines represent the high and the low of the previous calendar year. We've also got the closing price. So this is the highest point of 2016. This is the lowest point of 2016. This is the closing price of 2016. We can see that price is trading inside of those pink lines. So the market is very much in an area of consolidation. What I'm looking for is the market to be trading outside of the pink lines, either above the high, where we have a bullish bias, or below the low, where we have a bearish bias. Anything that is inside the pink lines, I tend to dismiss. So you can see how quickly I can look through a watch list like this. Aussie dollar, Canadian dollar. Excuse me. Aussie dollar, Canadian dollar, inside the pink lines. Aussie dollar, Swiss franc, inside the pink lines. It's looking to push through it, but it's still inside the pink lines. Aussie dollar, Japanese yen, inside the pink lines. Until we actually get a breakout of the pink lines, I'm really not interested. And so you can see how quickly I can go through a watch list and look for opportunities. Euro dollar, one that everyone is obsessed with. It's inside the pink lines. If you look at the monthly time frame, consolidation. Very clearly, it's just going sideways. If you look at where I traded this prior, was this bear trend. That's a 1-year trend. After every trend, the market consolidates. This isn't an example of how the trend is your friend. This is an example of, if I entered positions here, short positions, I want to exit down here. I don't want to go be in, out, in, out, in, out, loss, lose, win, loss. I want to enter, hold, achieve massive growth, and then execute my exit management plan at some point, and then stand aside until the next round of trend. This is just going through a consolidation. Now, how do I use the weekly and the daily? I have the 200 moving average, which gives me the bias. So above, I'm looking for long opportunities. Below, I'm looking for short opportunities. If you notice, I also have a trend filter. I have periods of green where the trend is bullish, red where the trend is bearish, and black where we're going through a sideways movement. I have the same logic on the daily time frame. Below the daily 200 is the bias is bearish. Above the 200, the bias is bullish, and I have the trend filter. What I'm looking for with the trend filter, guys, is alignment. So below the 200 moving average, I want the trend filter to be red on both the weekly and the daily. Above the 200 moving average, I want the trend filter to be green on both the weekly and daily. The way to look at this is the weekly is big brother, daily is little brother. Whatever weekly is doing, I want the daily to be following. I don't want the daily to be out of sync with the weekly time frame. So if you look at something which is looking quite interesting, which is the pound Aussie dollar. Yeah, if you look at the pound Aussie dollar, we can see that it's still inside the pink lines. What I need is a breakout to the downside. But if we go to the weekly, below the weekly 200, trend filter is red, although it's still going sideways. We need to have a breakout of that low point. And if we go to the daily, below the daily, and we can see the trend filters also alternating between red and black. So, but overall, the market is going sideways. This is a very, very good example of the overall state of the market. Everything in foreign exchange is just range bound. There is nothing that is actually in trend. I mean, we look at the US dollar, Japanese yen. You can see for yourself that it's inside the pink lines. It's going through a bit of a sideways movement. It's finding resistance at the closing price of last year. And if we look at the weekly, above the weekly 200, the trend filter is black. We want it to be green with a continuous move to the upside. We go to the daily, above the daily 200. So we have alignments between the weekly and the daily, but we're inside the pink lines on the monthly. But price action itself is just going sideways. If you look at the daily chart, very clearly, you can see this is a trend from November all the way through up till December. So this is a trend. This is a pullback. And then this is a consolidation. Trend, pullback, consolidation. Nothing interesting about this. Now, let's compare it to a stock that I'm long on. I'm long on Applied Materials. Okay, so if you guys are not looking at stocks, my question to you is very simple. Why? Why are you fixated with a market that's going sideways? Foreign exchange is going sideways. It's dead. I know you have all of these people on the internet saying you need to make 10 pips or 20 pips or go down to a 4 hour and make a bit of money. It's not how it's done. Foreign exchange is totally dead. You want to go to where the trends are. You want to go where the big dogs are. You want to go where they're providing the liquidity and moving the market. So you don't have to over leverage and overcompensate by risking large on small moves. What you want to do is risk small, but win big as the trend holds. Applied materials is a good example. It's a big move to the upside. Look, it's trending since 2015. What we're looking for is price to clear $40 and move all the way to this high point, which is around $60. So instead of having take profit levels, what you want to do is be looking at round numbers where price moves towards. And price has natural features to it. This is something that a lot of people fail to recognize and embrace. Price doesn't move in a straight line. Remember, we're looking at the monthly time frame, so it does look like a straight line. When we go down to the weekly and the daily, you'll see that price doesn't move in a straight line. But what the monthly is very good for is determining levels that price has moved in the past, and so where it could go in the future. And usually you'll notice that these are all at around round numbers. So if it clears 40, we want it to go towards 50. If you look at this all of these sort of closing prices, it's around $50. If you look at the high point here, it's just short of $60. Okay, so I'm looking for price to clear 40 and then move towards 50 and 60. Ideally, all the way up to $100. That would be my long-term target. And if you think that price cannot move to those levels, then let's have a look at Nvidia. Nvidia was one of my top performing stocks of 2016, and I'm still in this. I entered on a break of $40 when price broke above this all-time high. And this is another bit of logic that most private traders fail to understand, which is when all-time highs are broken, price is likely to go on to create new highs. What most people are looking for are reversals, because they think, oh, it's been at an all-time high before, it can't sustain this. This is what the news will make you believe. If you look at the Dow was never supposed to clear 20,000. If you look at the Dow now, if you look at where the Dow is now, here is your $20,000 mark. It's above 21,000. So if you listen to the internet, you'll never make the right choices, because the internet will always make you believe that a crash is coming, and that's designed to keep us in fear, to keep us stagnant. If we go to the weekly, above the weekly 200, trend filter is green, and this is what I'm talking about with a nice green clean trend filter above the 200 moving average. Yes, there'll be the odd bit of black during a pullback, but as long as we don't see red bars, I'm all good. Here's a bit of black, here's a bit of black, predominantly green. If we look at the daily time frame, above the daily 200, I entered my first long position, which was back in August, and these long positions are still open today. And as you can see, we had another breakout yesterday. If you look, there's a high point here, and yesterday's bar broke and closed above that high. So we have another breakout. What do breakouts tell us? A continuation of the trend. Breakouts are powerful. If I draw on this chart all the levels of support and resistance, I'm going to do it quite crudely. These are roughly highs within the trend. So every time it reached that high and people were going short, so every time it reached this resistance and they went short, they would have got burnt. Come to this point, go short, they would have got burnt. If you're not using stop losses, then you're going to be on a very rough journey. So the logic should prevail. Why are you looking to go short when the trend is bullish? What you should be looking to do is go in the direction of the bullish trend, and each time it breaks out of significant levels, you can add more risk, you can compound. Yeah. So AMAT, a top performing stock of mine so far this year, a UK stock that is doing very, very well is Burford Capital. So it's gone from, let's say, £2 down here, 200 pence. Remember, these are in pence because they're UK stocks. It's gone from £2. It's now at over £8. That's a massive move. You can see that it's trading above the pink lines. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is green. Now, if you look at the way it's moving, look at the way it's moved. It hasn't moved in a straight line. It's got a direction to it, which is up, but it's breaking out. It's pulling back, it's breaking out, pulling back, breaking out. This is what people need to understand, that price doesn't move in a straight line. And it's during these pullback periods where your profit diminishes, where you've got to detach yourself from the trade, where the psychology of trading comes in, where patience comes in. Okay. Yeah. Let's have a look at another US stock that I'm in. CNP recently got into this. You can see when it broke above this high here. Look at the risk to reward to the upside. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is green. And we had another breakout yesterday. It was only by 1 point, but we had a breakout yesterday. This obscure bar, this is because of earnings. It opened here. I think actually opened here, sorry. Opened here, went down, and then shot all the way back up again. That was all because of earnings. I've been long on this since a breakout above this high point here, somewhere around here. So I've been long on this since the start of the year. And you can see from this point here how well it's trending. If you remove this bar, and by the way, I was not stopped out on any positions on this bar because I have well-placed stop losses. You can see how well this is trending to the upside. This is adding significant growth. A trend like this can return you anywhere, so far, anywhere from 15% plus, a single trend. So if you've got multiple trends in play and each one returns you 20%, 25%, 30%, and you have 4, 5, 6 of these in play, you do the maths. You don't need to be chasing money when the money comes to you. And this kind of growth can happen over 4, 5, 6 months, a year, significant amounts of growth. And if you do this consistently year in, year out, that's how you grow an account. Okay, I think that is pretty much everything that I wanted to cover today. Let's have a look at, see if there's any questions. Are there any questions? Are there any questions coming through from YouTube? Is there any questions out there? Maurizio, I don't know if I'm speaking to Maurizio, if it's, I think it is Maurizio. Are there any questions? Are there, hi Maurizio. How many people are sat in? Okay. All right. So if there's no questions, so in summary, okay. So in summary, use the monthly for support and resistance. So you can see I've got my red levels and my green levels. These are major levels of support and resistance. I've got my pink line tools here. So that's the annual levels of last year. I want to see price either above or below. Inside, I tend to stand aside. Weekly and daily, you use the 200 moving average to give you alignment. So you want the weekly to be above the 200, so you want the daily to be above the 200. If the weekly is below the 200, you want the daily below the 200. If you have all 3 time frames in alignment, you're in a good environment to be looking to place trades. Above the pink lines, above the weekly 200, above the daily 200. Strong bullish environment. Below the pink lines, below the 200 moving averages, strong bearish environments. Of course, you then need to have a trend filter that can eliminate all the random pullbacks. You then need to maybe wait for a breakout. If you're using a breakout strategy, maybe you're using a pullback strategy, depending on, let price dictate to you. Don't be a one-trick pony. You know, simply having a one strategy all year round is not how you're going to make money. You need to be able to have various strategies for various market conditions. If you think about it, let's have a look at AMAT. If you look at the stock of AMAT, if you look at it from this point here, it's a very slow moving stock. It's not moved very fast. It's moving, it's slow and steady. This is a very reliable stock. But if you compare that to NVIDIA, if we take NVIDIA to this point here, look how this has shot off. From this point here, it just shot off in one direction. Then we had this big gap up. Then we had this another leg up. Now it's going through a bit of a consolidation. So you want to be able to identify what trend structure you're dealing with. Once you've identified which trend structure you're dealing with, you then need to be able to use the right strategy for the right market conditions. So this is what you need to do. First of all, pinpoint where the money is. The money isn't always in foreign exchange. As you can see, the trends are in US stocks and UK stocks at the moment. Foreign exchange is dead. So first of all, you need to pinpoint where the money is, which market. If you look at something like the US stock market, it has 5,000 plus stocks in there. How are you going to find stocks like Nvidia? How are you going to find stocks like AMAT, like Southwest Airlines, like CSX? Another stock that I'm in is CSX. Notice I'm not getting caught up in stocks that we are familiar with, like Apple and Yahoo and JP Morgan. You know, I'm not getting caught up in names. I'm not having attachments of names. What I'm looking at are individual stocks and trading them based on what the chart is telling us. So I took a long trade on this gap up, triggered me in, and you can see now this is slowly edging its way up. It's not a very fast moving stock, but I want to have a mixture. I want my portfolio to be a mixture of fast moving stocks and slow moving stocks, because then when the reversal comes, they will all react in different ways. A particularly volatile stock will react in a much more volatile manner, whereas a stock which is slow and steady will react in a slow manner. That's the general idea. It's not always a guarantee, but that's the general idea. So by having a mixture of stocks, you can then manage your portfolio when it comes to exiting. Okay, so once you pinpointed where the money is, you then want to be able to pinpoint the exact stocks. Now, I have a scanner that does that for me. In this community, within this community here, the apprentice community, you will be given scanned watch lists. This will save you a lot of money. I mean, the course is worth £99. The scanned watch list of stocks that are put into the community are worth thousands of pounds. Why is this? Because the scanner that I use to scan the stock market costs me £3,000 a year. For me, that's an overhead. It's a necessity of running my business. I have no problems paying £3,000 a year. I pay £3,000 a year. The members of my community don't, because the scan that I do for myself every morning, I put it into the community so that our members can take advantage of those particular stocks. So even though the course is £99, look at the value of what you're getting. You will have access to these pages as well. So these trend filters, the support and resistance levels, this page that you see in front of you, you will be given this page. And not only will you be given the page, you'll be given the logic behind the trend filter. You'll be given the logic behind the support and resistance levels. Everything is explained. We train people to become traders. You don't want to be reliable on a system like a robot. These signal services, you're not going to make any money from them. The only people that make money from signal services are the ones that pay you. In this current environment, in this current world we live in, there is nothing more powerful than your human brain when it comes to trading. Yes, we have good software tools that can speed up the process, i.e. scanners. Powerful. You have a good scanner, literally 5,000 stocks, boom, down to 20 stocks in a matter of seconds. Powerful bit of software. Yes, we need it. But from beyond that, once you've got that, the final execution of the trade should always be down to you. The final decision of why you should trade CNP and not BAC, for example, should be down to you, based on what the chart is telling you, based on your strategies, market conditions. You've got to have a combination of both. If you're trying to create an algorithm that trades for you, you're going to be very disappointed. The market's organic. You cannot automate something which is organic. Trend structures are always changing. So once you've pinpointed the stocks, which we will give to you, you then need to know which strategy to use. And the way you pinpoint your stocks, as already mentioned, is by being able to look for an edge. If you've got clear rules on how to define an edge, then charts become very simple to look at. You should be able to look at a chart within a few seconds and know whether a stock is tradable or a chart is tradable or not. In my community, my members will be able to look at this whole watch list and know whether each stock is tradable within 3 seconds or not. That is the time frame that I get my guys doing the analysis down to, 3 seconds. So an FX watch list of 50 or 60 currencies, which daunts most people and scares them, which is why they'll only look at the euro dollar or gold or the majors, because they have no idea of how to develop an edge. And a good chart should scream at you. Okay, so that's everything that I really wanted to cover, guys. Pinpoint the money. Expand your portfolio. Don't just look at foreign exchange. Have UK stocks and US stocks. Have multiple strategies, not just one strategy. When you're looking at charts, have good software that can help you speed up the process. Once you've found the right charts, the right scanned watch list, you want to then break that down further. So if you've got 20 stocks on the scanner, so you've gone from 5,000 down to 20, you then want to analyze that further and look for the best 2, 3, 4, 5 stocks that are worth trading. And that's where human involvement comes in. Looking at the history of the chart, looking at trend structure, looking at support and resistance levels. With time and practice, guys, you can do this within 1 hour. So my routine is 1 hour at the weekend, usually on a Sunday evening, and Monday to Friday, no more than 10 to 20 minutes in front of the screen, chart time. Yes, I spend more time because I'm training people. I do webinars, I do blogs, etc. But my own personal trading time is never more than 10 to 20 minutes a day. Okay, so as already mentioned, training on the 23rd of March, zaheer.live/seminar. If you want to do the online version, zaheer.live/apprentice. If you are on LinkedIn, please search for me. My name is Zaheer Anwari. If you're on Medium, please follow me. I do quite a few updates, as you can see, and you'll find these updates very, very useful. I talk about stocks that I'm in. I revisit stocks. So you can see here, if I just click on this, AMAT continues to climb since last posting on AMAT on the 23rd of February. So if you click on that, it will take you to the 23rd of February, and you can look at where I last blogged and how that has continued since my last post. So yeah, you will find my blog site probably very unique in the content that's being shared, and also just very useful in terms of taking your trading to a whole new level. If you scroll down, I don't just talk about stocks that I'm in. I give a lot of tips, and if you go right down to the beginning, it's a little bit of, you can see how many I've done. A lot of useful stocks on here. Yeah, here you go. Lots of tips. But I really wanted to show you guys something that I think you guys will find useful. Yeah, stuff like this. Manage a watch list like a hawk. I talk about how to manage a watch list. Learn to treat trading like a puzzle. You click on that. A lot of information on here on how to be a little bit more calculated with your trading decisions. What makes a good trade? So if you scroll down, there are just a lot of good-looking stocks on there, and a lot of interesting articles. One of my articles was featured in a New York publication because they came across me and they really liked it. So I was on the homepage of a New York publication. Let's have a look. The questions: do you have a third-party portfolio? I think what that person's asking me is, do I trade for other people? And the answer is no. I don't trade for other people. I have no interest in trading for other people. Right now, I'm interested in training people and trading individuals to become very good, successful private traders. There's a minefield out there. There's a lot of people out there promising you the world in their courses and delivering very little. And that's what I'm enjoying right now. I'm taking people like those, people who've been struggling, people who paid out a lot of money, and I am helping them to achieve their own portfolio. And that's what I'm particularly enjoying doing at the moment with my life. I'm not really interested in trading other people's portfolios. I have my own account. I had one account when I started trading in 2007. I've got more than 10 trading accounts now, all across the board. So you can see I've grown my account from 1 to 10. I've split my money across various brokers. I trade foreign exchange, stocks, commodities in different accounts. I don't need to be trading other people's accounts right now. What I want to be doing is helping people achieve their own trading goals and really creating a movement in the foreign exchange and the stock market when it comes to retail traders. I think, I mean, I don't know if that's your question. Do you have a third party portfolio? I could be totally wrong, but I think that's what it sounds like to me. Okay. I'm conscious of the time. Maurizio, are there any more questions, or was that the only one? If you guys want to contact me directly, I usually have one or two people. I don't have masses of people contacting me. And the reason for that is because it doesn't resonate with people until it's too late. Most people will continue banging their head against the wall, blowing one account after another, thinking that if this day trading strategy doesn't work, let me tweak it a little bit and try another day trading strategy. Effectively, what people do is they bounce from one day trading strategy to another, from scalping to this to that, blowing one account after another, losing vast sums of money, and more importantly, losing a lot of time. And then eventually coming back to me and going, you know what, I should have listened to you 2 years ago. Uh, uh, Oh, right, just a track record of your performance. Yeah, I get that. I get that. Everyone wants a track record of everyone's performances. I can tell you that I can create you. I used to be a photographer, and I traded for. I'm very good at Photoshop. I can put together a track record for you and a trade log, and I can send it to you, and it's totally fake. If that's what you look for in a mentor, then there's lots of people out there who will give you what you're looking for. That's not how I do things. How I do things is by content. If you look at most of those guys who give trade logs, they have zero content on the internet. They have a trade log based on most likely a demo account or some kind of system that they've back tested, and they've created a trade log, and that's what they're giving you. When you look at the actual content of what they're putting on the internet, there's nothing on there. And I had this discussion the other day with someone who got in contact with me from Thailand. He's an English gentleman based in Thailand, and he's insistent on me giving me his trade log. If I give him my trade log, I've given him my stop losses. I'm giving him all my trades that I've taken over several years. It's the kind of information that my community members have paid good money for. So my loyalty lies with my community members and not with people who are not inside the community. So in terms of a trade log, no, it's not going to happen. Nice bounce on the pound dollar. Pound dollar's in consolidation. If you look at the pound dollar, yeah, I get it, bounce. But what in terms of a bounce, it's nothing really, because if you look at it from this point here, it's just going sideways. So even though there's a bit of a bounce here, it's nothing unusual because the market is going sideways. It'll probably come to some point here and then bounce back down again. This is not the environments that you want to be getting caught up in. What you do is, here is your high of the consolidation, and this is the low of the consolidation. As long as price stays within this range, this is not an environment that you want to be getting involved in. Okay, so my personal advice, yeah, I can see what you're talking about, but my personal advice is to stand aside from this and wait for a breakout. It's very unclear which direction the market wants to go in. Okay, that's everything, guys. As I've already put my email, zaheer@zaheeranwari.com. If you want to email me regarding any questions about the training, about the community, then please get in touch. Okay. Wishing you all a lovely end to the week. Administrator, thank you as always. Take care, guys. Bye.